Welcome to the Business Income and Expense Tracker tutorial. In the next few minutes, you will learn the complete workflow from setup to monthly review. This workbook contains 7 connected sheets. Start here: setup, transactions, monthly summary, category analysis, tax, estimate, and dashboard. Use the pale gold cells with blue text for your entries. Leave white formula cells, calculated helpers, reports, and charts unchanged. The workbook follows 4 simple steps: set up the business record, every cash movement, review the reports, and take action. The most important rule is to enter every real transaction only once. All reports read from the transactions sheet. Begin on setup. Enter your business name, selected fiscal year, start month, currency symbol, and the fiscal month you want to review. Next, enter a planning tax reserve rate and the cash already set aside for taxes. These values feed the tax estimate report. Rename the sample accounts so they match your real bank card, cash, and payment processor accounts. Then review the category mapping. Each category needs a type, report group, tax label, deductible choice, and an active value of yes. Check the calculated fiscal year dates and selected month dates. These helper cells are automatic, so do not edit them. Now open transactions. Complete columns of through G and order date, transaction type, category, account description, amount, and business for review. For income, choose an income category and the account that receives the money. Enter the amount as a positive number. For an expense, choose the matching expense category and the account used. Again, enter a positive amount. The workbook handles the cash direction. Here is a normal example. July 18th, expense software, Visa Business Annual Software Renewal, $540, and business. Choose review when you are unsure whether an item is business or personal. It remains in cash movement but is excluded from profit until resolved. After each entry, check period status and entry, check fix, check entry, check category, or check transfer before using the reports. Use the special transaction type so profit and cash are not mixed together. Income refund reduces operating income and cash expense refund reduces operating expense and increases cash. Owner contribution adds cash without creating operating income. Owner draw removes cash without becoming an operating expense. For a transfer record, 2 matching rows, transfer out from the source account and transfer into the destination account. Record estimated or actual tax payments with transaction type set to tax payment. The cash leaves the account but stays separate from operating expense. Monthly summary is automatic. Start with operating income and operating expenses for each fiscal month. Then read net operating profit and profit margin. These measures show the performance of normal business activity. Deductible expenses and estimated taxable profit support the planning estimate used on the tax estimate sheet. Review owner contributions. Owner draws transfers and tax payments separately. They affect cash, but they do not represent normal operating profit. This is why profit and cash can differ. Use net operating profit for performance and net cash movement for available cash. Category analysis helps you find the biggest income sources and expense drivers. The selected fiscal month comes from setup. Compare the selected month with the prior month. Look for unusually large bars, new spending, or categories that change sharply. Check which income category produces the most revenue and which expense categories consume the largest share. Do not edit this report. Correct the date, type, category, amount, or business, and review value and transactions. Before using tax estimate, confirm the reserve rate, tax set-aside balance, deductible category flags, and all tax payment transactions. The report estimates taxable profit, calculates a monthly reserve, subtracts recorded tax payments, and shows the net reserve need. Review estimated annual tax reserve, available tax resources, reserve gap, and the selected month reserve need. A positive reserve gap means more cash may need to be moved into the tax reserve. This is a planning estimate, not tax advice. Finish on dashboard. After the transaction list is current, read the fiscal year income, expenses, net profit, and profit margin first. Then review selected month profit, the tax reserve gap, monthly income versus expenses, the net profit trend, and the expense mix. Use the selected month expense driver chart to identify the costs that deserve attention. In the action summary, start with the tax reserve gap, review transactions and data quality issues, then check the largest expense and top income source. Your regular routine is short. Add 1 row whenever money moves. Resolve review items weekly and change the selected month at month end. If a report looks wrong, first check the transaction date, type, category, account, amount, and business or review setting. For a new fiscal year, save a new copy, update, setup, and clear old input rows without deleting formulas, worksheet rows, columns, or charts. You are ready to use the business income and expense tracker. Set up once, record each transaction once, review the reports, and act on the results.